Hey everybody, I hope everyone is doing well and had a good day. Today's video, we're going to review the E-mini S&P 500 5-minute chart for Friday, July 10th, 2026. Here's the daily chart, the context going into the day. Market is in a trading range. So we had a tight bull channel, a trend line break with 3 pushes down, maybe 2 legs, 1 pullback, 2 implied pullback, 3, and then a strong reversal, micro channel for the bulls from here to a new high. That bull breakout got a wedge pullback, 3 legs down, closer to support. Bull breakout, pullback, and now the bulls are looking to get a second leg up. And this produced a 3-bar micro channel to June 30th. 3-bar micro channel, but now we're testing resistance in the range. So we're finding some more two-sided trading here. Bulls taking profits, bears maybe looking to sell, maybe looking for the tight channel to get a second leg down. Market's in breakout mode here, going more sideways as the bulls and bears fight over control. 3-bar micro channel. And then for the bulls, it's a high to bull flag. Bull reversal bar closing on its high, and a follow-through bar closing on its high yesterday. That's good for the bulls. One thing I mentioned in an earlier review is that I was wondering if this 3-bar micro channel to the 30th was going to get a symmetrical second leg, a leg 1 equals leg 2 measured move, and that would take us to a new high. So that's what the bulls are hoping for. The bears, they're hoping that strong enough trend line break here that there's disappointed traders selling up here, and that the tight channel basically gets, maybe the bulls get a small second leg, but we find sellers up here at the top of the range and a second leg down. After consecutive bull bars closing on their high, yesterday is not ideal for selling above. There might be sellers maybe at some distance above yesterday's high, but I think selling at yesterday's high is not ideal. The bulls have too much strong momentum. Sideways to up is more likely than straight down. And then here's the 5-minute chart for today. Small gap up going into the day. You can see the gap from yesterday's close to today's open. It's relatively small. Bull breakout bar on bar 1, breaking out to a new high above yesterday's high, above all the bars to the left. That's good for the bulls. Also, it's a micro channel since 78, no pullbacks, so good for the bulls, expecting a second leg up. But you can count 3 pushes, 1, pause, maybe 2, pause, 3, or simply 1, maybe 2-legged pullback, 2. So there might be some profit taking here above bar 1, but if anything, I'm expecting a minor reversal because the bulls have a pretty decent micro channel from 78 to bar 1. I'm expecting buyers below bar 1. Reversal bar 2, but doji bar, not ideal for selling, especially after the bull micro channel. It's probably buyers below 2, but they may not come in until below bar 1. Whenever there's a small gap, small gaps are likely to close. So the probability favors a pullback to test the close of yesterday. And then bar 3 is testing that close of yesterday, the moving average, maybe about a 50% pullback of the micro channel. So there's layers of support here, which is good for the bulls. Bull micro channel, probably a minor reversal, 2 and 3, expecting buyers in this area and a second leg up. But 3 is a bad stop order buy, so there's probably sellers above bar 3 and sellers at the high of bar 2. Bar 4, it's a good breakout bar for the bulls, but about half the bar is overlapping the prior bar, and it's approaching the bar 2 high, which at this point, the market's channeling again. We had a bull trend, and then a trading range, minor reversal, and then trend resumption here to a new high, micro channel, which pulled back. Now we're in the channel phase. So there's probably, like I said, probably sellers above bar 2. So as strong as bar 4 is, the upside is limited, probably with sellers profit taking bulls above bar 2, bulls would probably, instead of buying the close 4, buy a pullback. And this results in sideways trading here, 5 and 6, a couple of dojis, probably sellers above, and also probably buyers below, but maybe not directly below 6, maybe at yesterday's high, the open of bar 4, support below the market. 7 breaking up to a new high, but leg 3, micro channel, pullback, second leg, pullback, third leg, testing the channel line. So probably sellers up here. So then we get bar 8. It's a bull reversal bar. It's a buy reversal bar closing above its midpoint, but a bad stop order buy, basically leg 4 for the bulls. Probably sellers above and sell the close on 8. The market starts to pull back, 9 and 10, but testing support once again, and now it's 3 legs down, 6, 8, and 10. So the bulls, they're hoping for this to be a bull breakout, wedge bull flag to support, and then another leg up. But the bears have a micro channel, so there might be more sellers above 10 and a second leg down before there's resumption back up. So another bar added to the micro channel for the bears. The structure of the micro channel is weak. There's tails below bars, inside bar, a lot of overlapping bars. You know this is a channel on a smaller time frame, so the bear breakout here is unlikely. There's probably buyers below 11, and this channel down is likely to correct for a couple of legs sideways to up. But I'm talking about that on the lower time frame, so that correction could just be 1 bar on the 5-minute. And then 12, breaking the bear trend line. It's a doji bar. There's probably, so far on the open today, it's a trading range, and there's probably sellers above 12 and buyers below 12, limit order market. We can see there's been resistance up here all day, and there's probably buyers around the open of the day. You can see there's been support here in this area, so probably buyers below 13 or below 12. 13, big surprise bar. Biggest bar on the chart by far. I think the biggest bar on the screen before bar 13 was probably bar 10 yesterday, or bar 1, 18.5 points. Bar 13 was about 50 points. So obviously a huge bar. But notice that the bar is closing above its midpoint. So it's a big bear breakout, but it's got a huge lower tail. The bar closed above its midpoint. So there's actually bullish momentum into the close of the bar, and that's good for the bulls. Trading range after a bar like this is more likely. But again, because of that bullish momentum into the close, I'm expecting the trader's imagination. Basically, I see there's probably a reversal and a bull breakout on a lower time frame chart, and I'm expecting that breakout from the low of bar 13 to the close of 13 to get a second leg up. But because of the bear breakout, it's a big bear breakout bar, I'm expecting there to be trapped traders at breakout points, like the low of 3, the low of 11 and 12. So I'm expecting sellers up here, and for 13 to get at least some kind of attempt at a second leg down. So trading range, more likely, I'm expecting the bulls to get a second leg up, and I'm expecting the bears to get a second leg down. And 13 is such a big bar, and it's closing around its midpoint, that I suspect the market's going to remain within the range of bar 13 for the next several bars. So a bull bar, 14, but testing these breakout points, probably more sellers in this area. So I don't think it's ideal for buying 14. There might be more sellers above 14. 15, another bull bar, but a smaller bar. It's clearly channeling up on a lower time frame, overlapping bars, tails above and below. So probably sellers above 15. And then 16, continuing to channel up. You can see the channel with the tails on these bars. So that's at least 3 legs up on the lower time frame, and we're testing that breakout point, the close of 12, where the bar 13 breakout bar opened. So more resistance to the left with 3 legs up. Micro channel from the low of 13 to the close of 16. That's good for the bulls. So expect that to have a reaction, probably buyers below and a second leg up. But because of the big breakout 13, I'm not expecting the market to go straight up. I'm expecting to see some hesitation first. So at a minimum, I'm expecting the micro channel to pull back, and that pullback might be an attempt at a second leg down for the bears. Bar 17, bear reversal bar closing on its low. Not an ideal bar to buy directly below. When you know it's a channel with 3 legs on the lower time frame, and then you get a bear bar closing on its low, it's probably going at least a little bit lower. So bulls can either they can probably exit below 17 and then maybe look to buy a pullback instead. Bears can probably sell 17. However, because of the micro channel from 13 to 16, the downside might be limited. There's probably buyers below these bull bars. And 18 was a strong bear breakout bar. Very little overlap with the prior bar. Closing on its low, it's probably going to get a second leg down. Big up, big down situation. But the bull breakout from the low of 13 to the close of 16 is much bigger than 17 and 18. So 17 and 18, or at least 18, the breakout bar is probably going to get a second leg down, but we can't forget about the micro channel to 16 that's also likely to get a second leg up. Then a much smaller bar, 19. What's the leg count here for the bears? So it's a 3-bar micro channel, so in general, expecting a second leg down, but what's the leg count? Might be leg 3 for the bears. Leg 1, leg 2, overshoot of the channel line, leg 3 to 19. You want to draw a parallel line for the channel. There's your trend line. So the problem with selling here is that it might be leg 3 at support on the bear channel line. And I said because of the micro channel to 16, there's probably buyers somewhere below here. So if you're selling 19, you either need to be quick to exit. Basically, the market has to go in your direction quickly, because if you're selling 19, where's your stop? Your stop, it's not ideal to put your stop above 17 because it's a skunk stop location. There's probably sellers up here near resistance. Traders might use a 1.5 hour stop, 150% pullback of the signal, reversal and follow through. That takes you here. But even that's a skunk stop because it's at the top of the trading range. There's probably sellers up here. So it doesn't make sense to sell here and put a stop up here. So if traders are going to sell in this area, they either need a very wide stop and they need to be willing to scale in, or it's better to just look to sell a pullback, wait for the market to be closer to resistance. 3-bar micro channel, so not ideal for buying, expecting at least an attempt at a second leg down. Outside up 20, bull bar closing on its high. That's a problem for the bears. The 3-bar micro channel now is followed by the bull breakout bar 20 closing on its high. Now bar 20 needs a second leg up of its own, and this might be an attempt at a big second leg for the micro channel to 16, pull back, and then maybe a big second leg up. So expecting bar 20 to get a second leg and some kind of measured move up. Pause bar 21. For the bulls, not a bad entry bar because even though it's a much smaller bar, it's not like the price is far above the moving average. So the bulls, remember, might be 3 legs down in a channel, and the bulls are looking for a couple of legs sideways to up. And if it's going to be a second leg up, again, it's possible that we go from the low of 13 to the close of 16. That's a micro channel signal. And a lot of micro channels get symmetrical second legs. They take a lot more time and a lot more bars, but a lot of times they get there. And now we have a 3-bar micro channel down to support and then a bull outside bar. So pause bar 21, not a bad entry bar for the bulls, probably buyers below 21. And then 22, another big breakout bar. So that's a good micro channel for the bulls. Location here, not great for buying. As you can see, we're back at resistance, but the momentum is good. So it's probably going to be a minor reversal and a second leg up. And for the bears selling down here, they're clearly trapped by the bull breakout. Inside bar 23, might be more sellers above 23. An inside bar at the top of the range, but the momentum is strong, so probably okay to buy if the market's going in your direction. But if it starts to hesitate, probably better to buy a pullback instead because the market is at resistance. 24, small breakout bar, breaking out above all the bars to the left, but not closing at a new high. So can the breakout bar 24 get follow through? And then a bear bar 25. Pretty decent micro channel 20 to 24, so expect a second leg up. But 17 through 19 is enough selling that there's probably sellers up here for a second leg down. Sometimes you'll hear me say that I expect a breakout to get a second leg sideways to down. So this is an example of the bears hoping for a second leg sideways. They've clearly got a deep pullback against them. Micro channel 17 through 19 pulls back about 150%. And now the bears have a target here for a leg 1 equals leg 2 measured move. If a bear sold here and scaled in, this would allow them to get out of the trade around break even. And then the bulls have decent momentum, but now the market's at resistance, so bulls don't want to buy here. They're looking to buy a pullback instead. Breakout bar 26, strong enough bar, it'll probably get a second leg sideways to down. But the micro channel to 24 is clearly stronger than 25 and 26. So short term, we might get a second leg sideways to down, but I'm expecting that to be a scalp for the bears and ultimately for the bulls, 20 through 24, a more dominant feature of the day to get a second leg up. Then 27, testing layers of support. That leg 2 measured move, the bar 19 high, is also support. Bad stop order buy signal bar. Trap traders selling above 19. Buyback shorts here. Bull breakout, deep pullback, but we're finding support and buyers into the close of 27. Now the bears have a 3-bar micro channel down to 27. But remember, the bears who were selling here got trapped by the big bull breakout. So how eager are the bears going to be to sell here, especially above a bar like 27, closing above its midpoint? It's not a great bar for limit order sellers. There might be sellers above 26, closer to resistance. But again, that momentum, the micro channel 20 to 24, expected to get a second leg up. So sellers may not be here, but they might come in up here. So we're finding some support at the breakout point, 28, reversing back up. There might be some hesitation before, because of the 3-bar micro channel, there might be some hesitation before the market goes back up, but this is a micro double bottom, and that's good for the bulls. And on the lower time frame, it's probably a trendline break, test of the lows, and then a reversal. So better to exit shorts above 28, and probably okay to buy above 28, but use a wide stop and be willing to buy more lower. Now a 3-bar micro channel for the bulls, second leg up likely, so better to be long, expecting the market to go at least a little bit higher. A pause bar 30, probably buyers below. Micro channel, expect buyers below, second leg up. The micro channel continuing to grow. There's resistance to the left, so we might start to hesitate here, but there's really nothing to sell. There's too much buying pressure on the way up. Probably buyers below 31. Same goes for 32, inside bar, but not a great stop order. Not a great stop order, sell below the bar. There might be more buyers below because of the momentum. There's trapped traders below. Maybe a 1-tick pullback below bar 32, and then the bulls getting trend resumption, 33, 34, breaking out to a new high. Good for the bulls, but channel phase, so we might pull back here. But it's a tight bull channel, so expect the first reversal to be minor. A tight channel is a breakout on a higher time frame, and the expectation for breakouts is pullback and second leg in the direction of the breakout. So we're pulling back below bar 34 on 35. But again, it's a tight channel. And until there's more selling pressure, you have to expect that every reversal attempt is going to be minor. and that the tight channel, the breakout on the higher time frame, is going to get a second leg sideways to up. So any reversal here probably minor, not a great topping pattern for the bears. You can count 3 legs up, but the selling pressure, at least through here, is fairly weak. And even here, the deep pullback to 27, but open gap. Inside bar 36, again, minor reversal, more likely to be expected. And 37, a breakout bar. There might be a small second leg sideways to down after the 3-bar micro channel to 36. These bars are mostly sideways, not great for selling. So the bears, the micro channel pulls back, gets a second leg, but bounces at support, breakout point 30 high, and bars to the left. Leading to another bull breakout 39. For the bulls, tight channel, high 1, high 2, bull flag, high 2, top of the range, but tight bull channel, so okay to buy 39. You don't want to buy a high 2 at the top of a trading range, but in a tight channel, you can buy. In a trend, you can buy at the high of the day. And this gets a follow-through bar, good for the bulls, 3-bar micro channel to bar 40. Expect a minor reversal and second leg up, probably buyers below these bars. So the micro channel extended to bar 42, expect buyers below and a second leg up. 43 might be strong enough for a small second leg sideways to down, but minor reversal expected, probably buyers at the breakout point. Small inside bar, follow-through bar for the bears, but small inside bar. It's a trading range bar, and it's still above support. And it's still following micro channel to 42, which is still expected to get a second leg up. So minor reversal, expect second leg up. And then a reversal bar 45 closing on its high, good for the bulls. If you're short for any reason here, it's really difficult to make money selling in a tight channel, so it's not ideal to be short. But if you are short for any reason, 45 is a signal to get out of shorts. It's a reasonable stop order buy. Small trading range entry bar 46, probably buyers below. Now another micro channel to 47, probably buy the close, buy below, expecting a second leg up. And then the micro channel continuing to grow here, 48 and 49. Doji bar, you can call it a double top, but in a tight channel, you're expecting all reversal attempts to fail, to be minor, and become continuation patterns. So expect buyers below 49. And then a big breakout bar, 50. You can certainly count 3 legs in a channel, so there might be a correction here, but there's a relative lack of selling pressure. Because the channel is tight, this is more likely a wedge top in a bull trend, not a trading range. So you can expect a minor reversal after 3 legs testing the channel line, but do not expect a major reversal down. And look at the last leg, 45 through 51 or 50. Micro channel, expect a minor reversal and a second leg up. So 51, not great for selling. Might be okay to exit longs, expecting a minor reversal, but be ready to buy again above a bull bar. So minor reversal 51. There ends up being sellers above for a second leg down, but 54, the first bear breakout bar since 43. And like I said, it's been really difficult for the bears to make money through here. The last bear breakout bar, 43, got a small second leg, but ultimately led to trend resumption and a new high. So again, here, expect a minor reversal and for the micro channel to get a second leg up. And then a doji bar after 54, not a great follow-through bar for the bears on 54, disappointing. And then a bull breakout in the direction of the trend, 56, reasonable to buy, expecting at least a test of the highs. 57 broke out to a new high, another leg up to the channel line, so you can expect sellers in this area, but 57 similar to 51, not a great stop order sell, probably buyers below. Bull micro channel in the direction of the tight channel, expect buyers below and a second leg up. So minor reversal expected. We find buyers below and a second leg up, another test of the channel line, which is acting as resistance, so not ideal for buying up here, probably buyers below 60. Micro channel to 61, expect buyers below and a second leg up. And the bulls get it quickly here. Another micro channel, 65, expect buyers below and a second leg up. 66, bear reversal bar, but a small bar. Low probability stop order sell, probably buyers below 65. The channel up is tight. It's a breakout on a higher time frame. Not enough selling pressure to be expecting a major reversal. 66 might get a small second leg sideways to down at best, a scalp for the bears, but expect micro channel or the tight channel for the bulls to get more to the upside. And 67, one of the biggest bars in the bull trend, breaking above the channel line. This is possible exhaustion late in the trend. The trend has gone on for over 30 bars. Now we're getting a big bull bar to the channel line. This might attract profit taking from the buyers. So rather than buy 67, bulls might take profits on a bar like 67. That doesn't mean major reversal. It just means if the bulls are taking profits, there's going to be a relative lack of buying and the market might go more sideways to down. And if that happens, look to the left for breakout points, probably support at the 66 high, the 60 high. But we are getting that test of the channel line once again, which has been resistance. 68. Reversal bar might get a small second leg sideways to down, especially considering the context. Late in the trend, late in the day. And a disappointing follow-through bar for the bulls. Probably sellers above 68. And now we've got 3 bars sideways, so it looks like the market's entering more of a trading range here after the climactic bar 67. But probably buyers below. What about below 68? The buyers may not come in until breakout points like the 66 high. There's been so little selling pressure through this. Basically, it's a spike and tight channel. You call it a small pullback trend. Pullbacks are shallow, lasting 1 to 3 bars. This is a strong bull trend. I don't expect any major reversal here, but late in the day, you will sometimes find profit-taking sell-offs. But because of the lack of selling through here and the fact that I'm not expecting a major reversal, there's probably support at breakout points and the moving average. If we get to the moving average, there's probably support there. We haven't tested the moving average since bar 38, and it's been support. Limit order market, sellers above 73, probably buyers below. So we're going above bars, but at the top of this tight range. So expect sellers up here on 75, sellers above 76. Maybe outside down 77, another reversal bar. 3 legs on the lower time frame. That'll probably get a second leg sideways to down, okay to sell if you're willing to scale in, but the downside's probably limited, like I said. The moving average and breakout points are probably support. The bears make their scalp on 78, but too late in the day to be trading, really. Then we're also testing support, so probably expect a bounce, which we already got on 78. Expect buyers in this area. And then 79 right back to the top of the range. I'm expecting sellers above 79. Market's in a trading range. And then just a couple of smaller bars within 79 to end the day in this tight range. All right, that's going to be it for today's end of day review. Thanks everybody for watching, and for more price action fundamentals and how to trade price action, please visit the brookstradingcourse.com. You can get the Brooks Trading Course with the link in the description of these videos. All right, once again, thanks everybody for watching, and I hope everybody has a good weekend.